So good evening to all of you. Today, in the auspicious day of Chhat Puja, we are doing the webinar on a major topic on from policy to profit, how recent RBI's regulatory ripples reach MSMEs. We have with us one expert, CMA Pankaj Jain, who would be giving us the insight on this important topic. Before we start with an auspicious note with our institute's anthem.
सतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय.
So just a short profile of our speaker. Pankaj Jain sir is an accomplished CMA, CS, AMT alumnus of IIM Kolkata and certified independent director with 35 plus years of diverse corporate and consulting experience while working at India and overseas. He has raised funds from domestic and foreign sources for projects having more than 16,000 crore INR. He has managed real estate portfolios of 27,000 plus crores and successfully completed the assignments of 170 plus real estate projects spanning pan India for navigating real estate to the next level. He has worked in diverse roles with many MSMEs having global footprints and also guiding them to grow business globally. He has a proven track record of turning around the financial positions of several companies through dynamic initiatives, helping them to achieve exponential growth even in challenging times. He is also creator of MSME, MNC, and Realty Intel framework and is author of Amazon bestsellers Transform Your MSME to MNC. What you can know about RERA that would cost you millions. He is also founder of Jain Ventures Consulting Private Limited, a multidisciplinary consulting firm having dedicated consulting verticals for real estate and MSMEs. He is also an independent director of listed NBFCs, that is Usha Financial Services Limited. He is also associated with many socio-economic initiatives in various capacities and is mentored to many MSMEs with the objective of helping them to achieve sustainability and scalability of their business. With this prolific profile, I welcome Pankaj Jain sir to our forum and request sir to give his deliberations on this important topic for today. Over to you, sir. Sir, you are on mute, sir.
Yeah, thank you, Dipanduji. Thank you, Dipanduji, for nice intro. So first of all, I would like to thank the Institute for giving me this opportunity and sharing my thoughts with the esteemed fellow members. And I think from Institute side, our respected President, Vice President, and then Chairman of this BFSI committee, Shri Chitranjan Chattopadhyay ji, and respected other dignitaries who have connected to engage with this program. So I have high regards for all of them. So can you please confirm that this screen is visible?
Yes, sir. Screen is visible. You can go ahead, sir.
Okay. So as Dipenderji has already mentioned that our today's subject is from policy to profit and how recent RBI's regulatory ripples reach MSMEs. You all are very aware of that our country has the vision of making India as a Viksit Bharat, transforming India as a Viksit Bharat by 2024, 2047. And we are also targeting stage-wise the economic development to achieve 5 trillion economy status either by end of 26 or by early of the 2027, then achieving the this GDP of the 10 trillion by 2035, and consequently so more so, and ultimately transforming our country as a developed nation by 2047. Now in this entire journey, the role of MSMEs are extremely important because MSMEs are the growth engine of our country GDP. They play a highly critical role, not in terms of GDP or some employment, but directly in some social impact as well. So this is just a disclaimer. So that whatever information we are sharing, this is we have tried our level best to share our best of the information. But again, there is a word of caution that before applying in your own context, you need to understand your context, you need to understand your situation and then to apply the information, because all this information is very critical and very complex to understand. So this is just a caution. So I would cover in today's session, our key discussion points will be that just a, snapshot of the MSME sector in India, then some details of the MSME criteria, because recently Government of India has changed the criteria for MSME. That is very important, and I believe that many MSMEs are not still very well aware of the new criteria. So we have to understand as a professionals what is the new MSME criteria. Then of late by 2025, the RBI has raised a series of the regulatory reforms for impacting the growth of the MSMEs, and that is the genesis of the today webinar which our institute is conducting today. And then we will discuss that what RBI has really changed to in terms of their policy matters, then how these measures are affecting MSME growth. There are some risks, caveats, and distribution concerns. Then we will also discuss some policy recommendations that how we can improve further all this policy framework. Then some data analysis that how these reforms have impacted ultimately MSMEs at the grassroots levels. So I will skip this slide because Dipenduji has nicely covered my intro. So just I take this liberty to share some of my thoughts as a professional. My purpose is to make the life happier, and my philosophy is dream beyond imagination, desire within limitation. And my passion is capture knowledge, create wisdom, and share. And that is the reason I am among you, because that is my passion. That how I can share my wisdom with the esteemed audience, with the target audience. And my driving force is if others can do, why not we? And my magic mantra is collaborate, and collaborate. These are some award and accolades which I can mention to share with you. I am a recipient of the gold medal for best performance at top corporate level. I have been a regular jury member of Asia One, that is a Dubai-based leading global media group, which evaluates rating for the top 100 brands of India, Asia, and the world. So I have the privilege to be a jury member of all three versions of this magazine. And I have been mentor to the many entrepreneurs, MSMEs, advisor to the board for various institutions. I'm author of this book, as Dipanduji has already mentioned, and I have also privileged to be a distinguished speaker at various forums. So let's start with this MSME sector in India. So as I mentioned, that MSME sector has been a vital in India's economic growth since independence. And it requires low capital but employ a large workforce. As of now, 23 crore people. as of now, 23 crore people are employed in MSME segment. And we have around 61 million registered MSMEs, means 6.1 crore. And these are the MSMEs which are registered at Udyam portal. There are still many MSMEs which are not registered on Udyam portal. And to rough estimate, around there are 2 crore more MSMEs. So if I take those figures which are not registered on Udyam portal, so our uh, MSMEs numbers in real terms are the more than 8 crores, and they contribute 30% to our GDP and 40% to our exports. So you can see that how significantly they are contributing to our economic development. But the problem is that they face the severe financial challenges. So if you categorize the number of MSMEs, then you will observe 95% of our MSMEs are in the micro category. They are the micro enterprises. So they are not able to move into the small category and medium categories. What is the reason? So reason is the paucity of the finance. So finance is a major reason, although there may be some other reason as well. But the key reason for impacting their growth, for having the bottleneck in their growth is the finance. And that is the main reason that our government and the RBI particularly is very, very particular to take some kind of policy decision to accelerate and to stimulate the growth of this sector. This is the new MSME criteria. So as a professional, it's very important to understand that how this criteria can impact your professional decision making, the decision making of any other enterprises. So in micro enterprises, there is a investment amount of 2.5 CR, turnover amount is 10 CR. So this particular criteria is the composite criteria. To remain in a particular category, you need to fulfill the both criteria. If you are not able to fulfill any criteria, then you will move to the next level. So for example, 2.5 crore is the investment criteria, and if your investment is 3 crore, then you will move to next level, that is a small enterprises, despite your turnover may be 10 crore or less. Similarly, for small enterprises, it's 5 CR, turnover is the 100 CR, and for medium enterprises, it is 125 CR and 500 crore CR. So it is a direct, you can say opportunity for our professionals, because the number of MSME companies are now being come into this particular criteria are like anything, because earlier this criteria was almost half almost 20% or 30% of this in many investment and turnover criteria. But now since this criteria has increased, so many companies which were earlier in although a large category, so now they are coming into the MSME category, and they can take the benefit of the Government of India schemes now coming into the MSME criteria. And I personally feel that CMA as a professional can tap this opportunity, because most of the companies are not very well aware of that how they can take the benefit of the Government of India under these schemes. So they can take this criteria as a navigating factor and guide their clients accordingly. So let's take the very brief and quick view that how RBI is taking this their regulatory reforms in the current year. So since early 2025, the RBI has introduced a series of regulatory updates, which are their primarily focuses on the MSME, as I mentioned earlier. So if you navigate these key updates, so first of all, the priority sector lending, they have issued the master direction, that is a altogether a new framework for private priority sector lending. Number two is the on lending via NBFC. The on lending means the banks are lending to the intermediaries like NBFCs, and in turn NBFC are lending to the MSMEs or other priority sector lending companies. So that is a on lending sector. So now for this also they have issued a various direction clarifications, circulars. And then MSME lending consolidation, they have issued RBI issued a unified MSME lending directions for banks. so that there should not be any confusion, because MSME needs multiple kind of lending. For example, their working capital need, for example, their capital needs, for example, their term loan needs. So RBI has consolidated all these kinds of needs, so that there should not be any process require related difficulties for MSMEs while approaching to the financial institution or banks. Then they have also introduced some credit risk and capital proposals. Now, the intention of these proposals is that how some capital can be freed for MSME lenders from the end of the banks. And now it has impacted, have certain implication, like they have lower structural barriers, easier for banks and NBFC to lend. Then the channels have also been widened. So earlier there were the focus was only on bank, but now NBFCs, housing finance companies are also brought into the picture to distribute this priority sector lending to the new reforms by Reserve Bank of India. Then one more thing has also been resulted and come as an outcome, that is enhanced capital efficiency, because proposed risk weight changes which RBI has introduced, that can expand the lending capacity of the bank. So I will discuss in detail all these kind of directions in my subsequent deliberation. So the key takeaway from these changes are that RBI measures aim to reduce friction, encourage intermediation, and accelerate MSME access to credit. As I mentioned earlier, that the access of capital is the key challenge for the growth of the MSMEs. So RBI is, through new regulatory framework, through new directions, is trying to address this problem. So let's understand one by one that what RBI changed, what are the key measures. So first of all, RBI has issued revised priority sector lending, very important. The revised priority sector lending directions, which are effective from 1st April 2025. So whatever earlier PSL directions were there, so RBI has replaced with this new direction. These are the consolidated priority sector lending, which are targeting classifying the master direction and effective from 1st April 2025. So now these new directions are basically revisiting the sector target, classifying the mechanism which banks can use to meet the priority sector lending obligation. And this is the single largest structural investment that determines bank incentives to lend to MSMEs. So coming next is the permitting priority sector classification for bank lending to banks, lending to NBFCs and housing finance companies for lending to MSMEs. Now, this is the single most this you can say is the bold move by the Reserve Bank of India, because earlier whatever lending was there from banks to NBFC or HFC, and in turn and NBFCs and HFCs are also doing some lending to MSMEs, that was not considered under private priority sector lending. But by virtue of these directions, all these funding or lending to NBFC and HFCs are covered under the private this priority sector lending. So now, as per this RBI FAQs and clarification that explicitly permit banks to classify lending to eligible NBFCs, HFCs, and other lenders as private sector lenders when those entities lend to eligible priority sector. So earlier only banks were responsible to do this priority sector lending and do lending for to MSMEs through this priority sector lending. But now NBFCs and HFCs also can do the priority sector lending, and they can take the loan from banks. So this is the mechanics which the RBI has put to make the process faster. And now these guidelines also recommends a uniform methodology for priority sector lending classification of such lending that creates a formal lower friction route for banks to satisfy priority sector lending targets. So whatever lending banks are now doing to such NBFCs or housing finance companies, so now those funding is also now considered under priority sector lending. Earlier, these kind of fundings were not considered under priority sector lending. So now by considering this priority sector lending, now MSMEs have two choices. They have choices to take direct funding from banks, and as well as when there are certain problems related to their eligibility criteria, related to some documentation work, related to some accessibility. So they can also approach the concerned NBFCs or housing finance companies and take the loan from them. So this has also made a consolidation and reinforcement of the MSME lending rules and single window composite loan facility. So now that is also a genesis of the RBI regulatory reforms, that how we can create a MSME lending through single window composite loan facility. So now the RBI is continually emphasizing on the single window composite loan limits, and lending norms are designed to simplify working capital plus term loan financing. So now earlier, for working capital and term loan, one has to apply, an MSME need to apply separately for working capital and separately for term loan. But now under new regulatory framework, they can apply with a single composite application. For example, composite limited such as 1 crore for small borrowers under priority guidelines, and consolidated directions for MSME lending. So now MSME can apply for working capital as well as term loan through one application only. So now these instruments are reducing the procedural friction for smaller borrower, because now that has reduced the paperwork and some procedural delays, because now you can only make a single application for both kind of loans. So now RBI is also restructuring for some rehabilitation of the viable MSME units, because earlier what is happening that once some loan is going bad, so there was a lot of pressure on the MSMEs to, as far as their loan recovery is concerned. So now RBI is also creating some framework on restructuring, so that there should be some early intervention and structure rehabilitation which is possible for viable MSMEs. So now this is increasing and preserving the economic value of the viable MSMEs. So earlier the MSMEs are finding very problematic kind of situation once they have missed some deadline to paying their loan amount. So there was a pressure on the recovery from the bank side or lender side. So now the RBI has provided some kinds of ease, where some kind of rehabilitation is possible. So the banks or NBFC can pass over the NPA norms, and they can provide the rehabilitation package in case certain minimum viability norms are followed by the MSME. So these recent proposals, which are focusing on the credit risk and capital rules, there are certain more proposals which can be effective from October, from this month only. Although these are into the consultative stage, these are not yet finalized. But RBI has proposed revisions to the credit risk and frameworks, including some lowering risk weights from the certain loan exposures, and introducing an expected credit loss provisioning model with transition phases. So it is expected, although it is in a consultative mode, the RBI has invited the suggestion from the various stakeholders, but it is expected that once it is finalized, it will reduce the risk weights for MSME, and it will also help to various lenders. Sorry, just give me time. Yes. So they will also give us some kind of breathing space, some more breathing space to the lenders, to banks, because what is happening that once the loan becomes bad, so there are pressure on the banks, on the lending institution, as well as borrowers. Yeah, we were here. Okay. So, as I mentioned that these proposals are underway. The RBI has floated a consultation paper for inviting the suggestion from all the stakeholders. So we are expecting that once these new norms are finalized, now we will have the more liberal credit framework for MSMEs. So they will have the reduced risk rates for MSMEs and more detailed exposures, and they will also have the lower capital charges. The cost of capital is also expected to be lower once these norms are finalized. So although these are the consultative proposals which are open for public with for feedback. So if we see that what is the next big thing which RBI has introduced. So now they are shifting their monitoring burden, they are shifting their regulating burden as well, because the moment there will be more and more player in the market, because earlier only banks were there. The RBI role was to have the monitoring for banks and NBFC, but major focus of RBI was on the banks only, because RBI was having, on the lower radar of the RBI due to the reason, because there was whatever their government's number there, whatever their policy framework were there relating to the economic growth, that was more applicable to bank. But now since RBI has now engaged through this framework, NBFCs and housing finance companies, so it is expected now the role which was earlier being played by the banks, now the same role is being played by the NBFC. So now in times to come, there will be a spurt in the number of the NBFC. There will be spurt in the business, in the quantum of business which NBFC will engage with. So now RBI has also come with a very fantastic, concept of the SRO, self-regulatory organization kind of thing. So now RBI has formalized that some non-bank lending system will be monitored by the SRO. So as of now, some associations, some industry associations have applied to Reserve Bank of India to get this recognition as a SRO. So once it is finalized, once this approval is given, so that particular SRO will be responsible to monitor the performance, progress, and other parameters of the NBFCs and housing finance companies. So RBI has, by this process, has also delegated some kind of responsibility, some kind of their functions, applications to this self-regulatory organization. So this is a key changes which RBI is putting in their monetary mechanism as well. So it is expected that it will affect the reliability and scale of the NBFC-driven MSME credit channels, because once you will have robust monetary system in place, so naturally your credit mechanism will be much more effective. So now let's understand that how these measures are affecting MSME growth. So first of all, it's very simple to understand credit supply quantity, because at the end of day, if whatever reforms RBI is taking, if there is a no increase in the quantum of the funds available for lending to the MSME, there is a no use of any reform. So if we assess in terms of credit supply means quantity, so yes, it is positive, because since priority sector lending is now covered not only to banks but also to intermediaries like NBFCs and HPFC, these housing finance companies. So now the eligible NBFC and HFCs are also increasing their stake and their funding channel to the MSMEs, because now they are getting more funds from banks and other sources. So now in terms of the quantity, the result is positive. That now there are more and more funds which are available to the MSMEs at ground level. And as far as conditional upside from risk weight informs is concerned, so proposed reduction are in terms of lending to MSMEs and retail exposure if data finalized, because that are again in the consultative mode, which has been introduced in October, means in this month only. So if data are finalized, it is expected that will also free more capital. So the quantum of capital will be more after October, once these new norms, means second version of the norms are finalized. So in terms of quantity, in the reforms 1.0, the quantity of the funds has been increased, and in reforms 2.0, it is expected the quantity of funds will be increased more. So now, like quantity, the cost is also very important. Whether cost of credit to MSME, because not only accessibility of funds is important, the cost of credit is also very important. Since we are CMAs, we can understand that how cost competitiveness makes a lot of difference, and cost of credit is also part of the cost. So if we evaluate that how these measures are affecting MSME growth in terms of cost of credit, so yes, it is a good sign that cost of credit has been low. So now, because there has been greater competition among intermediaries, because now there are banks, there are NBFC, there are fintech, there are lenders. So now it is this particular competition is exerting downgrade pressure on spread on their spread over time. Spread means whatever is their cost of fund and whatever there is the income from the lending. So whatever their profit margins are there, so now they are taking their profit margins on the lower side due to this competition. So, but one has to see that how this transaction and information costs for MSMEs remain high, because digital underwriting and credit score penetration. So that is also needed. So if it is improved, then small MSMEs can also be take this advantage. So proposed capital easing helps only if lender pass on the gains. So this is also very important, that although the lenders are getting advantage for having the lower cost of capital, lower cost of fund, but how they can pass on to the final borrower. So that is also a key. But as far as their impact is concerned, the cost has been lower, since the overall cost of credit become lower due to more player are coming into this process. Number third important part is the speed. Okay, whether it has increased the speed, convenience, and certain product design. So yes, it has improved due to the single window composite loan norms and clear priority sector lending on lending rules. So now that has been incentive to the bank as well. And number two, now that is giving some kind of innovation options to the NBFCs, fintech companies, that how they can package their product where working capital and term loan needs can be given to the single loan application. So definitely this will reduce the documentation and time to sanction for many small firms, and improving working capital management and supporting growth. Next is the how this is affecting financial intermediation and risk allocation. So by allowing on lending channels to count for priority sector lending, as I mentioned earlier, that earlier priority sector lending was only considered when this was done by banks. But now the other channel, means on lending channels like NBFCs, microfinance institution, housing finance companies, other fintech companies. So whomsoever are the last mile lenders. So all these intermediaries are now also considered under the priority sector lending. So now by allowing this, by changing this criteria, so the scope of the financial intermediation has now opened a plethora of the opportunities. And as far as their NBFC's local knowledge and fintech underwriting can serve, means because these NBFCs are more connected to the customers, because banks reach is only limited to certain segments, but NBFCs are working in a niche area. So their product innovation is also very fast. They work in a robust process as well. So the efficiency is also efficiency is also increased due to these measures, because ultimately this is encouraging the intermediaries, and in terms intermediaries are also trying to focus on their efficiency. So next is the whether these reforms has impacted on the stability and some downside mitigation. Yes, enhanced is restructuring frameworks for viable MSMEs are helping to preserve the productive capacity. So as I mentioned, that there are certain MSMEs which, because there has been always ups and downs in the business. So the only thing is that whenever there is a downside of the business, so earlier there was no mechanism to hold a small companies, because for big companies there were a lot of options, but for small companies there were no option earlier. But now there has been a structured approach which has been provided under this framework through rehabilitation rules. So through this kind of framework, now there has been a stability in a growth of the MSMEs. So if there has been certain business cycles where there is a downside, so at least there is a assurance from the credit side that there is some support and they can restructure their loan. So this is stabilizing support their MSME growth. So if we just analyze these particular reforms in terms of short term versus medium term impact. So short term, you can say 0 to 12 months. So since there are lot clarification, and then priority sector guidelines which RBI issued. So mostly they are affecting that how banks are reporting and channelizing funds to the having the immediate jump in the credit. But improvements in product packaging and non-laundering flow will be only depending when the bank will take the policy decision on the ground level, because still there are a lot of companies which are under stress, and in order to avoid the insolvency cost, so that is also a better option for banks, that in case some loan is going bad, so to give the rehabilitation package to the concerned companies. So that is also a win-win position for a bank, rather than starting a because despite these reforms, ultimately decision lies with the bank. Still, they have the option of the IBC. They can trigger the CIRP. But now, since this particular mechanism and framework is available to banks, so now at least banks are preferring for the RBI framework rather than starting the CIRP, because as far as CIRP is concerned, in terms of a small company, the cost of insolvency is very high. So ultimately, whatever cost is there as a financial institution, they have to take a haircut. So that makes a sense that if certain viable possibility is there in the MSME business, so that is the immediate impact which has created that earlier in terms of bad loans, the banks were directly triggering the CIRP process because they were not interested to take any risk of their money, because they were knowing that there is a small company and you don't know that whatever this problem is there, whether the promoter will will vanish all the business, promoter will dispose of all the assets. But since now this framework is formally providing a solution to the banks which they can consider for such a situation. So in case where there is a good promoters, the situation is very realistic and there is a possibility of the bouncing back of the back of the business. So now the banks, rather than starting the insolvency, rather than trigger the insolvency process, so they are giving the rehabilitation package to small companies. So this is the immediate impact which due to this reforms has we have seen. And if you see the medium term impact for 1 to 3 year, so now the that is expected more of this framework, which is reforms 2.0, which is under the process, which is under the consultation. So it is expected that when these reforms will be finalized, so and that will be when it will be implemented, so it will further improve the capital efficiency of the lenders, and it will materially also give some larger loan to the MSMEs with lower spreads and more innovative credit products. And since SRO framework is also expected to be finalized very soon. As I mentioned, that some association have also applied for being recognized as a self-regulatory organization. So it is expected soon RBI will give status of SRO to some association. So once we will have the full mechanism in place, so it is expected that the growth of the credit will be much more, and we can see improvement in the investor confidence and quantum of the funding as well. Although have been positives which I have shared with you, but there are certain risks, caveats, and some distribution concerns as well. So first of all, there is some operational risk. The because we since now we are counting on lending as a priority sector lending, so it can also create a negative incentives, because if the monitoring of the end use and final borrower eligibility is weak, and there is no robust reporting by self-regulatory organization or RBI, then definitely it will be very difficult to judge whether that money has been reached to the genuine MSMEs or not, because there is a possibility that this channel can be misused in the shield of the priority sector lending. And number two is the pass-through risk, because there is some benefit to the lenders to taking the money on the lower capital, since priority sector lending is there. So now bank will give funding to the intermediaries on lower cost. But how they will pass on this particular cost to the final borrowers, means MHMEs, means how particular this lower cost reach to the MSMEs. Now this is only possible when they will pass on this particular benefit to the MSMEs, because they can take the maximum advantage of this cost, and they may be reluctant to pass on this advantage to MSME. So this is also a risk if they will not pass through this particular benefit to MSMEs. So ultimately the cost of capital at MSME will not be a lower side, it will remain high. So this is also a risk, but it is expected since there will be competition among various intermediaries. So intermediaries will be compelled to pass on maximum benefit to the MSMEs. Then there are some, risk of the some, formal MSMEs, which is account and credit histories. So that is expected they will benefit the, earlier, because many micro enterprises, as I mentioned, it is expected that there are 2 crore MSMEs which have not yet registered on the Udyam portal as well. But it's not like that they are not contributing to our economy. They are contributing to our economy as well. But only point is they are not very well organized. So now there is a challenge that how we can provide the same benefit to those unorganized MSMEs, because as far as formal MSMEs are concerned, so they have the option to take the benefit from directly banks as well. But for in unorganized MSME, there is a little challenge. So now this we have to also see that how we can have the real policy, this policy framework and these reforms advantage for the benefit of the unorganized MSMEs. And last but not least, there is also risk that how that is implementation and timeline risk, because there have been several reforms earlier which remains under the consultative mode by the various government authorities, and still they need the operational guidelines. So we need that whatever rules and whatever law is finalized under reforms 2.0, there should be clarity, there should be clear vision of implementation, there should not be any hiccups, there should not be any ambiguity. So if those are met within time, only then the real benefit can be derived, because if there will be any delay, then there will be no benefit of such reforms. So let's see the data, because as you know, data is data gives the true picture of any statement, any fact. So data is always impartial. Data is always neutral. So let's analyze the data, that how these reforms can impact some some impacts has already made, I mentioned earlier, and how they have the possibility to impact something in future. So first of all, if we say the momentum, so momentum is already positive, because if you see that MSME credit growth, the share in FY 2025, that are have the rising share in total bank credit. So that reflects that lenders are increasingly focusing on MSME, and basically the whatever this priority sector lending is there. So this is also incentivizing the banks to give the lending, or to give the financing to the intermediaries. And now the decline in NPAs also gives the comfort to the risk averse institution, because as I mentioned that the RBI is also in their framework has a guideline for rehabilitation of the viable MSME units. So now their NPA level has also been declined due to the resorting this rehabilitation packages. So now this is also giving some comfort, because certain banks and certain institutions are very conservative. So this is also a positive factor for them to not shying away for lending. So the momentum is as of now is very positive, and however the growth is uneven and concentrated. So the as of now the stronger growth is coming more in the medium SMEs and established MSMEs, as I mentioned in my earlier slide. Our real challenge is that how we can pass on the benefit to unorganized MSMEs, because as per estimate 2 crore MSME is not a small number. This is a big number. And even in the category of the organized MSMEs, the number of the micro MSMEs is 95%. So you can say that almost take the 5 and 5 crore are the micro MSMEs, means micro enterprises under organized, and coupled by the 2 crore in the unorganized sector. So 7.5 crore micro enterprises. So real benefit is that how these reforms can provide the benefit to these enterprises. So that is a real challenge. So as of now, although micro and small MSMEs has taken the benefit, but as far as these micro enterprises is concerned, the outcome, the impact is not so much as it is expected. So now we are expecting, we are hoping that in times to come, by coming more and more players into the picture, now the benefit for micro enterprises will be more in times to come. So now NBFCs are now, this is a latest trend that NBFC are scaling faster than banks in MSME lending. So as a matter of fact, I'm also an independent director in a listed NBFC, and my NBFC has also, growing exponentially since the time it has been listed last year. Now in terms of business, the asset under the managements are going exponentially, and not only this our NBFC, they are all NBFCs. If you take the data of the all NBFCs across the board, so now they are scaling faster, and their growth rate is much more than banks in MSME lending, because now they have the option to take lending from multiple banks. And by taking the loans from multiple banks, they are now giving loan to the MSMEs. So whatever role which banks were earlier doing, now MSMEs are doing. Now banks are also being too liberal to giving loans to the NBFC, because they thought that instead of engaging 500 MSMEs, it makes sense that they engage with one NBFC, because since RBI comfort is there, because in terms of priority sector lending, the banks are obliged to fulfill the target. So now banks are taking this as a very easier bet, okay, because NBFC funding is somehow very secure. So now the banks are now taking a very easy bet. They are financing liberally to NBFC, and since the funding to NBFC is becoming easier, so more similarly, the funding to MSME is now also becoming easier through NBFCs and some microfinance institution. But the question is, there is a large unmet demand. So now this is a big challenge. As of now, it is estimated 25 to 30 lakh crore credit. Yes, my dear friends, you heard right. 25 to 30 lakh crore, big credit gap. So this is the requirement which our MSME sector need to fuel their growth, to take their growth to the next level. So that is a big challenge, that how we can fulfill this particular credit gap. So now, although RBI is trying their level best, but still we are expecting that our government will also take some leap and formulate some kind of policy framework where we can reduce this credit gap, because until and unless we are able to reduce this credit gap, it will be very difficult for us to achieve the target of the our goal for the economy of the 5 trillion or 10 trillion or developed nation. So it is very important, because this is a single most parameter to understand where we are stuck. So we are stuck in terms of the availability, in terms of the accessibility of the credit to these micro enterprises, because these micro enterprises are 7.5 crore in terms of number. They are having multi-crore persons employed in their companies. So it is not a question of the economic development, it is a question of the social sustainability, social existence, because these companies are providing employment at the grassroots level, even to the unskilled labor force. So that is the reason we need the existence and growth of these particular companies without any thought, without any other option. So, however, there are, some constants from overall credit, because, if you see the overall bank credit growth, so now that is that is decreasing, because in terms of MSME credit, it is increasing, but overall credit growth is basically decreasing. So that is also a matter of concern. So as far as new loan space is concerned, so there is also a limited space where banks can lend some money. So that is also a matter of concern. So now the unless banks reallocate or expand capital, lender must choose where they can allocate marginal credit, so that MSME must compete with other segment also, for example, housing and corporate retail. So now bank need to restructure all these kind of option, all these kind of product, all this kind of lending, their segments where they can increase their growth, because overall credit growth as of now is on the lower side. So that is a concern. And we need to then understand that how we can monitor the distribution risk and depth, because the moment there will be growth, there will be more player into the system. So we also need to understand that how this is monitored. So although the RBI has put the SRO system, but we will see that how there will be some numbers where we can see that success will depend on whether growth reaches to the micro enterprises, because as I mentioned, I repeatedly mentioning that the 5.5 CR in organized and roughly 2 CR in unorganized sector, totaling 7.5 crore micro enterprises. So even as a professional, I took as a my and our collectively extreme responsibility that how we can support these micro enterprises, because believe me, these enterprise has the full potential. They have the full potential to become a small company, medium company, large company, and even a listed company. But only thing is that they do not have the accessibility of capital. They have plenty of business orders in hand. They have plenty of business opportunities despite all these competition, despite all these challenges they have, because they work in a very niche area. So that is the reason they have certain good business growth opportunities. But only thing is they are not able to implement due to the paucity of fund. So there are some policy recommendation which I think if are adopted by RBI or some other institution, so they can maximize the MSME growth impact. So first of all, for RBI and government, So it is suggested that whatever their part is on priority sector on lending credit, so that should have the verified outcome metric. So there should not be, only just like paperwork. Okay, now that private priority sector lending is covered for NBFCs and for other intermediary. So there should be a proper vouching through metrics. For example, time to loan. So there should be proper parameter that in what time loans are being disbursed to the loan from taking application from MSMEs, particularly these small MSMEs, and how much time has been taken to final disbursement. So at least it will be observed that whether the benefit is being passed on to the ground level or not. And secondly, for RBI, so when they are finalizing some risk weight, some their ESL reforms, and they are phasing their implementation, so they should have the clear cut, transitional capital, targets, and they should avoid some kind of, stereotype kind of, rules, and there are some kind of their you can say some kind of, suggestions, some kind of policy framework which has some kind of, ambiguity. And rather than having the theoretical kind of suggestion, it is suggested that if they can provide the some templates, so where we can make sure that whatever benefit is being given to the intermediaries, the same benefit is passed on to the MSMEs, so that there should be lower cost of lending to the MSME. So it is suggested that if RBI can give some kind of template for monitoring, okay, this is the lending they have taken from the some bank at particular cost, particular lower cost, and how they have passed on, what are the spread they are charging. So there should be some kind of reasonability, some kind of allowability to taking the profit for such kind of lending. Because since now MDFC and other intermediaries are taking benefit of the lower capital, so same benefit they should pass on to the MSMEs. So if the RBI will give some kind of templates to monitor this, so it will definitely help her. Then for regulators and RBIs and SEBI and then self-regulatory organization. So first of all, they should have some data sharing. So what some credit bureau can be created, some GST linked turnover data can be shared, and some minimum underwriting standards for NBFCs who are receiving bank funding. Because uh, ultimately, if NBFC will fail to lend to the right borrowers. Ultimately, then there will be more credit risk. There will be more default at the NBFC level, because the framework relaxation is for MSMEs, not for NBFCs. So it is also equally important that NBFC will have the same level of the standards, so that the ultimately loans are given to the eligible borrowers only. Then for banks and NBFC, there should be a single window. So as far as composite loan is concerned, RBI are already proposed, already implemented in their framework. So there should be very simplified documentation for loans up to 25 lakh. But 25 lakh is not a very big amount. So if we have the rapid decision service level agreements, which have very easier, so that can really help these levels of small enterprises, because small enterprises are not very conversant with large level of documentation. So for these level of borrowers, it is recommended that there should be different service level agreements with easier terms which they can simply understand, and the process of taking this loan will be faster. And as far as this MSME and trade bodies are concerned, so they should also have the good financial records. They should adopt the GST, then direct benefit integration, and some digitization also, so that they can access the cheaper and faster products as they become available. So I have the final thoughts, because I would also like to keep some time for question or answer. I don't know whether organizers have planned for question or answer or not, but I will keep this provision. And I don't want to lengthy this webinar also, because I can understand to attend the virtual program is not so easy. So now I'm coming to my final thought. So if you take the, priority sector lending master direction, then private priority sector lending, on lending clarification, then MSME lending consolidation and consultative risk weight reform. These are the four things. So if you assess this ultimately, so what they have done, so it have tilted the policy. So they have moved the policy towards increasing the supply of credit. So whatever this MSME credit that was available earlier, so now the MSME credit is in terms of quantity, in terms of cost, in terms of convenience, in terms of speed, as I mentioned in detail in my earlier discussion. So that has been improved, that has been enhanced. So and the moment there will be single window composite loan, so it will also help the smaller size of MSME, particularly micro MSMEs, to have the potential capital relief, and that will have the some relief for lender as well, because if they put the some robust system which can disburse their loan, then they will also save their time and efforts in terms of disbursement and recovery of the loans. And however, the if you want to see that whether this uh, whatever RBI has reformed in reforms 1.0 and then refined 2.0 is still going on. So whether this will be have the full benefit or not, ultimately it will be depend on execution, because any framework, any law, any regulation, any rules, that depends ultimately execution on implementation. So it is expected that once these consultative reforms are, finalized, some SROs are recognized, and some through some competition, whatever there is a lower cost to the lenders that is passed down to the borrowers, then definitely there will be a real benefit to the MSME companies. I would like to recognize my success is attributed to my East, my ultimate gurus, parents, family, friends, well-wishers, and the whole universe. Let's make lives happier. Thank you so much.
So thank you, sir. I think a lot of questions have come in the chat box.
Okay,
So
I will take this. I
yeah,
will take.
Q&A, sir. Q&A section. If you see, there there are plethora of questions.
Okay, where I can see?
Sir, Q&A. In the top left, you can see.
Sorry, it is not being shown. I think I should stop sharing my screen.
Yeah, yeah.
One. Okay, so those who want to note my coordinates, so I will just pause for a 30 seconds. So you can just note down my coordinates. So if you want to reach me out after this session, you can also invited. You are welcome to reach me out. I'm glad to connect my fellow professionals. So I will just close this screen in next 15 seconds. Q&A. Yeah, now it is visible. Okay. Okay. Yeah. So I take the question. First question is from Mr. NB Vaidyanath. MSME borrowers facing financial stress, the RBI has implemented frameworks for revival and rehabilitation. This allow for loan restructuring uh, the account as a non-performing asset, giving viable and chance to recover. It is really welcome. I think this is a statement. So this I have already covered in detail. Mr. N. Vaidyanath has given some fact. Again, Mr. Vaidyanath has sharing some facts. So these I have already covered in my scheme. Sorry, in my PPT. Now there is a question from CMA RAM Sarah Nawam. As you said, NBFC has more local knowledge to reach MSME than commercial banks. But as NBFC will only benefit if the scale of loan is used, so they will focus more on small and medium segment as per latest change. But how it will benefit the micro segment? Do RBI provide any specific appreciation or benefit to NBFC if they support micro? Yes, so that is the Mr. Ram. That was the genesis of the today discussion, that under priority sector lending, earlier only banks were covered, no intermediary were covered, because earlier intermediary were also giving loan to the MSME companies. But whatever banks were giving loan to these NBFCs or intermediaries, that loan was not covered under priority sector lending. But since now RBI has changed under new reforms, under new framework, whatever loan banks are giving to the NBFCs, who are giving loans finally to the MSME companies. So now that particular amount will be considered under private this priority sector lending. So since now this is considered under priority sector lending, so now banks are giving more loans to the NBFCs, because before this framework, there was a very difficult situation for NBFC to take loan from the banks. But now, since this loan is now covered under priority sector lending, so now banks are considering more secure to give loan to the NBFC, because whatever loan they are giving to the NBFC, that is completely secured. So in turn of this particular, cascading effect, ultimately there is now availability of more credit to the MSME sector. I'm not able to find more question, Dipenduji.
Yes, sir. There are other questions also. I think NBFCs has more local knowledge to reach MSMEs than commercial banks.
That I
But
have replied.
yeah.
That I have replied.
Yes. If you go up also, there are a few more questions there.
No, actually, that was not a question, Mr. Let me share with you. This Mr. NB Vedanath, he has not asked a question. He has just shared some facts. All these facts I have already shared in my presentation, in my discussion, I'm in my deliberation, I already shared. I'm not able to see any question after this CMA RAM Sarvanam.
Yes.
Is there any more question?
No, sir. This is the last question, I think.
So if anyone is interested to ask any question more, so you can ask. You can write in Q&A box.
Sir, one question from my end, sir.
Yeah,
Sir,
sure.
trades and various aspects has come for invoice discounting for MSMEs.
Yeah.
So how you think that this has benefited the small scale sector enterprises,
No, so
especially?
yeah. So so that is a apart from the today topic RBI reforms. So the government has introduced a portal, a dedicated portal for that cases. So through registering your MSME on that portal, you can get your discounting of your bill. So that process is very robust, very the cost is also very standardized. So through that process, you can take, bill discounting much faster way. Number one. Number two, even there are certain fintech companies, so which are also providing this invoice discounting to MSME companies. So if you have good clientele and if you are billing to those companies, so you can get the funding as soon as you bill your you ship your product and the product is received by the concerned company. They acknowledge they received the goods received note. Then you can discount your bill or invoice. So there are a lot of options which are available from government side as well as from private side.
Right, sir. Sir, another aspect is digital lending directions, which has come recently
So
from the
digital,
RBI.
sorry, digital,
Lending directions.
right, right.
Sir, I think it has also created some unified code for the borrowers, and also they are protecting the interest of the borrowers, like giving a transparent pricing, and this has also helped in giving some MSME credit benefits. So, can you, sir, give some
Yeah,
insight?
so earlier, what was happening that the process of the bank, because no, due to lengthy process, it was very difficult for the borrowers to reach out them. Number one. Number two, the platform which most of the banks were having not was having so much user friendly features, no, but no, not having the so much user friendly accessibility. So that was a real problem. So now to address this problem, lot of fintech companies has extended their digital platforms. They have tied up with the banks. At the end of day, the loan or credit is granted by the concerned NBFCs or concerned this bank only, because those digital lending platforms are not doing credit directly, because otherwise they have to take the license of from the RBI as an NBFC. But what they are doing, they are facilitating the process. So through facilitating this process, two, three benefits has been emerged. Number one, entire process has been standardized. Number one. Number two, the accessibility has been now become more faster, because they are now reaching the various niche areas. Because as I mentioned in my deliberation, that real challenge is that how we can give benefit to the micro enterprises, because that is a real challenge. So now since these digital platforms work in their respective niche areas, so their last mile connectivity is very, very high. So they are very easy, they easily connect with the borrowers. So now accessibility of funding is also become easier due to these digital platform. Number three, very important, the speed is becoming faster. There has been not only convenience, not only process has been reduced. Now speed is also become faster, because the banks have within standard parameters, they take quick decisions whether this particular loan proposals is eligible for loan or not. So now the process of decision making of credit is also becoming very faster due to these digital platforms. So now these digital platforms have revolutionized, I think, and facilitated the MSME funding. But as I mentioned, these are only enablers. They are not credit provider. They are only enablers. So until and unless there are some credit providers, they have the larger capital funds with them, and when they have the lower cost of funds, when they have the improved process at their level, only then we can impact to the these number of the micro enterprises. But nevertheless, not only digital enterprises, by virtue of these reforms which RBI has taken in this particular year, it is expected now lot of NBFCs, lot of fintech companies will come, which will provide, which we will take the license also, because that is the reason I also said that RBI has to also see that how this NBFC licensing, some other fintech licensing process can be liberalized. So if we are able to liberalize that kind of process, so definitely we can provide more funds at lesser rate, at faster speed to the MSME companies.
Right, sir. I think no further questions from the participants. And I think, sir, the dint of time, you have completed the
Uh,
presentation, and we'll
Yeah, there is
share
a
you.
one question. Just hold on. There is a one question I just got. CMA RAM Sanvardan, lending from banks to NBFC, then MSME, and this route, how the transactional cost and other expenses can be waived off. Is RBI provided anywhere as a latest change? No, RBI has not provided any waiver because the role of RBI is to provide the framework. As I told, ki that now the bank can take the decision for priority sector lending. It does not mean that NBFC's funding to MSME come to the priority sector lending, banks are compelled. No, still banks have the choice. Banks have the choice under priority sector bracket, they can give fund to anyone. But the only thing is that now since this option is coming to banks, and now it is much more easier for banks to give or to have the engagement for n number of MSMEs instead of having n number of MSMEs. They are more happy to give loan to the one or two or three or five MSMEs. So that is the reason this particular dynamics has been changed. As far as their cost and other expenses are concerned, RBI has no role to play with. Ultimately, this is completely depending at the discretion of the concerned banks or concerned NBFC or other intermediary. So I have published all the question. So I have
Thank you, sir.
no question left.
Yes,
So
yes.
thank you so
Thank
much.
you, sir. I think it was a very nice and informative presentation as mentioned by many of the participants, and I thank sir for your wonderful presentation. I would be very happy, sir, if you can share your presentation so that we can upload in our BFSI portal for the benefit of the participants who have missed today's session due to work pressure or any other festival occasion. So we are also having a lot of activities from BFSI. Our BFSI Chronicle would be releasing by 31st October, and it is our 22nd issue. And I request Pankaj sir to contribute since you are having best issues in Amazon bestsellers. One of your article would be very pertinent if you can provide us in the next issue, if possible, sir. Especially you have touched upon both the regulatory aspects and also the policy aspects of RBI. It would be a nice connect with the members on this pertinent topic. And we thank our chairman in absentia because due to some pressing issues he could not join today. But he has connected Pankaj sir, and we have very much privileged to have the session today in this online forum. We also thank our BFSI board members who are always encouraging us to organize more activities in this online forum. And we thank our president, vice president, other council members. We thank our BFSI teammates, especially Shantanu and Dhruv Biswas, those who are contributing for this department. I thank other departments like CPD and our IT department for making this happen in this online forum. Since today is a festival day for many of the participants, we will not block you. And we hope you have a nice uh, evening today. And we will be having a lot of sessions in the coming days. We will keep posted in our online forum, our BFSI portal. Please have a look. Those who have missed, we are always giving the updates in that. And we thank wholeheartedly Pankaj sir for your time and efforts. And we'll be hosting your this PPT which you have shared with me just now, so that it is benefiting to all the participants. With this, we close today's session. Thank you, sir.
Thank you. Thank you to all. Thank you to all. Thank you so much. Thank you.